in one of the holiday events, a family friend brought up the fact that they had made a bunch of money in Micron recently. And, when somebody does that and has made a bunch of money in a given stock, it generally doesn't phase me at all, because, I don't get any kind of FOMO. Uh, Stocks go up all the time without me being in them. So, there's always these massive rises of a stock. In this particular case, I ended up just looking at the stock a little bit more, Micron, just to see whether or not it made sense to trim some, or does it make sense to buy some more for this family friend. And as I was looking into it, I was surprised about um, the execution of Micron's growth in revenue. And then I started to read more and realized that, wow, memory apparently is a major bottleneck for AI, and all of the world's memory supply is already sold out for 2026, including Micron's.
Which is funny, by the way, because since you made this purchase, all I've been seeing in the news is the memory shortage. Like I saw an article
Yeah,
today saying like Samsung's expecting their phones to increase in price due to the memory
due to the
shortage.
memory shortage. So it's like a universal memory shortage. And then there's also storage shortage, because traditionally storage have been on these hard drives, and most of our computers these days have SSD drives, which are much faster than disk-based hard drives that are like spinning. But obviously these AI systems wanting to be as fast as possible, their storage also needs to transition over to SSD, or these solid state devices for storage. So there's like a memory shortage, which is like RAM and high speed memory, high bandwidth memory, as they call it. And then there's like storage memory that is long term storage, but also needs to be extremely fast. And both of these um, are products that Micron happens to make, and they happen to be sold out at, and they have increased their capacity, and they're still sold out at the increased capacity. So one of the most amazing charts that I saw on Micron is, let me pull it up real quick. Hang on one second. So their uh, earnings estimates for next quarter. And this looks like a mistake in our system. And I literally had to look this up to make sure that this is real. Their next quarter estimate for revenue for Q2 2026, um, Micron is one quarter ahead in their sort of fiscal calendar.
Mhm.
So next quarter is Q2 2026, is 18.7 billion, compared to a record quarter that they just came out of, 13.6 billion. So they're expecting an additional 5 billion of
Wow.
revenue next quarter. This is unprecedented type of growth. There's only one other time when I've seen this type of growth, and guess what that company is?
Tesla?
No,
Nvidia.
it's
Nvidia.
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 Exactly. Which like, for a massive
Got
company
it.
that is already a $13 billion revenue company to go from 13 to 18, I've never seen that before, except for Nvidia. And here we go with Micron having this type of growth. So the next question is, okay, like, what, this company must already have these ridiculously high valuations, price earnings ratios, price sales ratios, but it turns out it doesn't. When I started buying into it, it had a PE of around 25. Even right now, it's a PE of 30.
Can you zoom in?
Um, oh yes. Let me. I'm I'm always bad at doing this, but its current its current PE is Micron's current PE is 30, and this compares to, for example, Nvidia's current PE is 45. Their price sales ratio is 24, um, and basically most of the tech companies like Microsoft, Google, Apple have higher than 30 PEs, but nowhere near the type of growth rate that Micron is expected to have. So Micron's last 12 months revenue, 42 billion, grew at 45%, but their next 12 months is expected to grow another 70 or 80% on top of the 42 billion. Um, I've not seen this kind of opportunity on the market before, which seems kind of crazy. Now, obviously, these are all just my opinions, but the analyst expectations, and I don't put a lot of emphasis on analyst expectations, but analyst expectations on Micron's profits for 2026 is roughly $30 to $40 per share. So if they do $30 on the low end of profits, of EPS, their PE would be roughly 11 for 2026 if their stock price didn't move.
Right.
So, when you take that into consideration, a PE of 11, if their stock price doesn't move, well, chances are a company that's growing at 70 or 80% year over year is not going to have a PE of 11. They're probably going to have a PE of 30, maybe
And P probably
maybe
going to go
even
up.
higher if people believe that 2027 is going to be an even better year for them. Um, this is like an opportunity that seems kind of too good to be true. So I posted about it on X, saying, "Hey, like Micron seems too good to be true. What am I missing here?" And the X community fell into two groups. One was like, "Yes, I've been saying this for the past year, and Micron's up like 250% past year or whatever." And then the other group, the bears on Micron, are like, "Yeah, but memory is cyclical." Well, this whole idea that memory is cyclical is kind of an interesting idea, because if you look at Micron's revenues, and it might be worth looking at this for like the past 10 years instead of just the past 4 years, you do see some two cycles potentially, like one over here where they sort of peaked in 2018 and then fell back down in 2020 and then went back up by 2022. They peaked again and then fell very quickly. And then now they're sort of coming out of this like major super cycle of growth. Um, so there's a couple ways to look at this cyclical argument. One is there's been two cycles in the past 10 years. So, there's kind of unpredictable in terms of when they happen. The second is that, well, if the cycle for memory demand slows down, that probably also means that CPU or GPU demand for Nvidia and AMD and others have also slowed down because, GPUs are going to need memory. Um, so chances are this particular cycle, if it is a cycle, is going to be tightly coupled or tightly connected with GPU demand. And we don't know when that's going to end. And there isn't anyone who can tell us when is this GPU demand going to die down. We've been expecting it to die down for a couple of years now, and it hasn't. And it just seems like this massive investment in data centers is going to only continue as these data centers get built over the next several years. So, so the memory is cyclical argument seems kind of shallow. It's like, okay, when will the cycle end? If you can't tell me when the cycle ends, well, then everything is cyclical, technically, right? Eventually,
Yeah.
demand will die for all things, but in the meantime, this company is growing at a ridiculous pace and is making massive capex investments to bring on additional facility to build more memory chips for 2027 and 2028, because their visibility of orders and commitments is that they're already sold out for 2026. They can't make more than they have already sold. And now they're sort of building out the capacity for 27 and 28 and beyond. So super fascinating company, Micron.
Yeah.
I went in
My
with 3% of my portfolio, and then the next day I ended up doubling it. And
Oh,
I wish I
we're
had
going to get
tripled
to
it.
that. I have a question about that.
Okay.
Going back to the cyclical piece, my take on it is one, in the market, there's always going to be patterns you can find, and they're patterns until they're not, right? Like
Right.
just because something happened one way historically does not mean it has to continue to happen in the future.
Right.
The other piece to think about is it was cyclical in a world before AI. And
That's
now
right.
we are in a AI world, and arguably things are very different, which would cause the pattern to break or be different. So, like you, I also don't buy this cyclical argument, and I am not a shareholder in Micron. Now, you mentioned before or just now, you already own over 6% of your portfolio is in Micron. This is now a larger position than Bumble, which we've spent a lot of time talking about.
Right.
And you created this position while Micron was hitting new all time highs. So, from an outsider's perspective, this kind of feels a little bit like FOMO. So,
Yeah. So
it-
yeah,
yeah,
good. I'm glad you brought that up because it's also super rare for me to buy a stock that has already gone up a couple 100% in less than a year. Um, and the reason for that is because when I look at the multiples just look terrible, right? Like if you look at them, for example, uh, the couple of stocks I own, right? The multiples on Rocket Lab
right.
and Robinhood are perfect examples. Are not that great. They're not super attractive anymore in the way that they were 2 years ago, right? Um, so, oftentimes I'm building out my positions slow because the stocks when they come on my radar and I'm like getting interested in them, they're on their way down, and oftentimes that momentum just keeps going down. So I've like learned to buy slow. Um, in this particular case, this is the first time I've encountered a stock that has gone up 200%, and other people have not FOMOed into it for it to really be up like 500% the way, like you would expect it to be based on its fundamentals. So it has really attractive fundamentals to me, like a forward PE of under 10 when I was buying it is unheard of. And it's like only 11 right now for 2026 expected PE. Um, what tech company that is growing at 70% can you buy that has a price earnings ratio of 11? I mean, you'd have to go into the retail market in order to, we talked about retailers like American Eagle or Lulu or whatever having price earnings ratios in the teens. Well, here's a tech company growing at 70% that has a price earnings ratio, a forward price earnings ratio in the teens. And uh, that, that just never happens. So I started with 3% of my portfolio thinking I'm going to buy slow. And then I did more research. And the next day I was like, wait, I might be missing out on something here. And I doubled my position thinking I'm going to buy some more if it goes down. And then, of course, it started to rip and it's up already 17% since I bought it. So
Wow.
now I'm kind of like holding back. but, but it still seems relatively cheap to me. But
So here's my other question for you. Earlier in 2025, you bought and sold SMCI. And this
yeah.
is not exactly the same business, but it's similar. So my question is like, why like did you get out of the space to kind of go back in?
Yeah. So SMCI had multiple issues that after I got in, I started to recognize some of them. Before I got in, there was the issue of accounting irregularities that had caused their auditor to quit, by the way. So that was sort of like the, the thing that they had said it's not an issue, and new auditors had came in and certified it. So I gave them the benefit of the doubt. But as I listened to the founder and CEO of SMCI, he just was not very inspiring. And then they continued to like miss their numbers. Like this would be the equivalent of me buying into Micron, them expecting to have, uh, you know, 18 billion in revenue next quarter, and then coming in at 12
Mhm.
or 14 or something like that, and having a major miss and then not having a great explanation for it. So SMCI had these type of issues going for it that were not good. Uh, it operates at a much lower margin, 9 or 10%, as opposed to Micron's 50+% margins. And then the growth in SMCI's revenue was not coming from the US. It was coming from Asian market, which was kind of surprising considering how much data center build out is happening in the US. So there was a number of reasons that I got soured on SMCI and exited the position. And it's a good thing is the stock is down since my exit pretty substantially. So I obviously don't regret that. But Micron has a CEO who I've listened to now. He happened to be the co-founder of SanDisk, the memory chip company that we all use in our cameras and various different devices, and has now become the CEO, or has been the CEO of Micron for the past 8 years. He seems to be investing in the right things. He seems to have a deep technical knowledge and is making the right moves for Micron. And then Micron, being a US based company, is now part of the essentials that are considered very important for national security. Like, we want to build our GPUs here for AI, and we also want to build other chips that are dependent on these, on the other chips that GPUs depend on in the US as well. And Micron is that company that's doing that. So again, lots of things going for Micron. And then it has two South Korean competitors, Samsung and SK Hinks. I'm not sure how you say their name, but both of them are also sold out of their entire capacity for 2026. So all signs point to, there's only three chip makers, memory chip makers. They're all sold out for their entire 2026 memory capacity is sold out. And the numbers look fantastic. And the question is, how long can this continue? Right. And that's the speculation that we just don't know.
And I believe for those other two companies, correct me if I'm wrong, they're either international companies or
They're
OTC,
both
so they're not directly listed on the American Stock Exchange.
right. Right. They're both South Korean based,
Okay,
which
let's
I basically only invest in US based companies. So that's another thing.
right.